Right, with that, I'd like to call up our first speaker, Hari Chandanya. I apologize if I got the pronunciation wrong, from Standard Bank. He was at Standard Chartered. He switched to Standard Bank. I'm not sure why, but I'm sure he'll explain that to us. He's going to speak to the evolution of financial services in Africa. Where are you now? Ah, there you are, right there, hiding right under. All right. Could you give him a warm round of applause, please? All right, I'll just leave Zintle and Sia here. They will be watching you.
Good morning, ladies and gentlemen. Thank you to AGF for this invitation and the opportunity to share my thoughts today. I have been asked to talk on the evolution of financial services in Africa by looking at how financial services have been developing in the continent, what it was, and how it is evolving to make this region as the investment destination. In terms of geographic focus, I'll focus primarily on sub-Saharan Africa because that's where I look at. And that is getting increasing attention from global and regional investors and presents significant opportunity for investing on the continent. And where I believe the largest financing gap lies and the opportunities for asset managers and owners, especially the private equity investors. Africa represents 15% of the world population, but just 3% of the world's GDP and less than 1% of the stock market capitalization. I'm sure a lot of us are familiar with that stat. To meet the increasing demands for goods and services, there's a need for financing in the real economy. And although it's still early stages, but the financial sectors and the fund industries are growing across the continent. And according to various global analyst firms, sub-Saharan Africa will continue to go through this growth transition over the coming decades, and which is going to be underpinned by the strong economic fundamentals and the growing investor appetite. Now, there was a time when this region was deemed too risky for many investors due to economic volatility, and which was partly due to the dependence on the commodities, poor reputation for political instability, and of course the corruption. However, since the turn of the millennium, the governance has improved across much of the continents, and which in turn has allowed prudent macroeconomic and fiscal policies to prevail, accumulate reserves, and protect economic stability. Now, we all know that the broad, all-inclusive financial market, which makes it easy for investors for enabling Africa to grow. Now, commendable progress is being made. In fact, the recent ratification of the Africa Continental Free Trade Agreement promises to create a single market with a combined GDP of $2.5 trillion and access to 1.2 billion people, which is very powerful. However, more needs to be done by individual countries in Africa to reform and liberalize their financial markets. I'm going to take a broad sweep at the banking industry, asset management, and overall capital market. I mean, it's such a wide topic. One can keep talking about for a long time, but in the interest of the time, just focus on the key things. So let's look at the banking market. I mean, according to McKinsey's analysis, you can look at and divide the region into sort of 4 categories. They are nascent markets, they are transition markets, they are sleeping giants, and then there are markets which are relatively mature. Now, in 2014, it was reported that sub-Saharan Africa, with 350 million unbanked adults, account for 17% of the global unbanked population. But the bank assets are now increasing in the recent years. I mean, that shows the increasing inclusion, and which makes the banking as the largest in the financial sector. However, it is likely that this growth will wane in the coming year as the competition increases. We are seeing the new categories of players coming into the banking industry, and as well as the structural reforms, which will also see that the assets will move to the other parts of the financial sector as well, rather than being concentrated only in the banking industry. Now, the key development, which I'm sure on everybody's radar, is the emergence of mobile money operated across African markets, which helped in financial inclusion and growing mobile money payments. Now, as per the World Bank FinTech survey, financial inclusion in sub-Saharan Africa has increased dramatically from 23% in 2011 to now close to 45%. And which is important because access to financial services is a widely acknowledged tool for promoting credit creation, enhancing capital accumulation, and of course, increasing the overall economic activity in the region. So digital is clearly what is leading the market. And I mean, as you can see here, like 40% of the transaction on an average in the region is already going into some or other digital platform. Now, what it also means is that as the fintech startups continue to underpin the daily transaction, they are also attracting the high caliber of global and local investors. I mean, 2017, approximately $800 million was injected into African markets through investments in various kinds of fintechs across the region. Now, provision of fintechs, of course, comes with its own challenges. A major one is the lack of a strong technology infrastructure in the region. For example, unreliable mobile network. Another is a lack of trust from stakeholders into the financial institutions and the product they offer. Now, McKinsey did a study, and what they say, they identified 3 building blocks required for powering inclusive growth of fintech in emerging economies, and which is digital infrastructure, 2, dynamic financial services market, and 3, the digital financial product, which meets the needs of individuals and business in a way which the current tools are not really giving them. And that's the key as far as the banking goes. Now, looking at on the capital market side, I mean, we all know the capital market is the largest source of financing in any developed and emerging economies. I mean, for example, in US, UK, where the market cap to GDP ratio is well over 100%. And they also provide then the investment opportunities to foreign and domestic institutional investors. But if you look at Africa, we find the capital market of various economies is still underdeveloped, which is due to low liquidity, poor infrastructure, and few new listings in the recent years. Now, although, as per the World Bank report, you see that 6 of the fastest growing economies are in the region, but I think the question remains is that, is the capital markets playing an active and primary role in financing this growth? Now, if we look at this data point, so the weak state of several of Africa's capital market can be assessed from indicated as savings to GDP or market cap to GDP ratios. Now, broadly, a market cap to GDP ratio of 75 to 90% reflects a capital market that is representative of its broader economy. Other than South Africa, most of the African markets as of now is below 25-30%. Nigeria, which is one of the largest economies, is around 10-15%. Now, which is clearly very low compared to other emerging economies like Malaysia, India, which is ranging from 150 to 100%. Now, that shows that yes, the markets are small and they are not playing an active role in contributing to private sector growth at this point of time. What we need is the innovative thinking in developing the instruments and establishing the institution to encourage the more segments of the economy to access capital market. Now, some countries like, of course, South Africa, Botswana, Kenya, Nigeria, I mean, they have made steady progress in reforming their financial market. I mean, if we look at the Africa Financial Market Index, of course, South Africa was the top ranked, but it also highlights the progress and commitment which different countries are making at this point of time. But you still have like Ethiopia, Mozambique lag behind. There's in terms of development of stock exchange, which is necessary for capital raising. We know that there's no exchange as of now in Ethiopia. We know there's no equity listed in Angola at this point of time. In fact, South Africa is the only market where the total value of listed equity is more than 100 billion at this point of time. And most of the reason is much smaller at but it also presents the flip side of is that there is huge opportunity. And that's what I think should be of interest to this forum, because the picture is not completely bleak. So don't mistake that I'm here to just show the negatives for the region. I think there's some significant improvements being made in the past few years to develop Africa's capital market. In last 5 years, the total value raised through IPOs is around 10 billion, of which $500 million was raised in the region and another 2.5 was raised through the dual listing processes. But if you look at the further offers, then the number goes significantly up. Now, but it's still to put this in context and also to highlight the opportunities in the region. According to the World Bank, the remittance to sub-Saharan Africa in 2018 was around 39 billion. So more money was sent to sub-Saharan Africa through remittances in 1 year than what was raised through IPOs in 5 years. So, I mean, it just reflects that, you know, the upside of what we are seeing here. Similarly, according to UNCTAD, the FDI in Africa in 2018 was approximately 40 billion. Now, FDI has been increasing in recent times, but if you look at it, it's still just 3.5% of the global FDI, which is again, reflects a huge opportunity. And even of this 3.5%, the 57% of that just goes to 5 countries in the region. Now, looking at the debt market, the Africa representation on the global debt capital market is primarily dominated by sovereign issuance. And in the last 5 years, of the total global bond deals of around 140 billion, sovereign accounted more than half of it. And there is still a strong appetite among the global investors for the African Euro bonds, of course, due to the high yield and improving macroeconomic management and geopolitical stability. And that market will continue to look at higher. Now, the important thing from a capital market perspective is also the infrastructure. And I think in the last 10 years or so, the huge amount of work which has happened, we all know to accelerate the financial market reforms, we need a strong capital market infrastructure. And that's where countries need to pay more attention to the trading and settlement infrastructure, and because that will improve the competitiveness and that will attract, you know, bigger share of the global capital. And I think on that front, if we look at the work which is done in terms of the upgrading the stock exchanges, getting the depositories, improving the clearing and settlement infrastructure, there's a huge amount of work done in the region. And I look at it very positively because that creates the right foundation and gives the greater confidence that as the flows will start increasing, people will get comfort that they're dealing in infrastructure which is comparable to the other emerging market in the region. Now, moving the attention towards the asset management side and then primarily more onto the pension side, because that is still dominates the asset management space in the sub-Saharan region. Now, we know that Africa's transformation requires huge resources. I mean, for example, just for achieving the universal energy access by, let's say, 2025, there's a need to raise up 55 billion annually in domestic and international capital, while as much as 50 billion is needed to fund other infrastructure. Now, that's where it increases the opportunities for the saving institution. And a lot of progress has been made through the policies that have increased the size of assets held by the local investors, creating opportunities to develop the new financial product and enhance the market liquidity. The pension fund sector in the region has been growing steadily, and I expect to continue to grow considerably because if you look at the coverage of the working population is still very low. So clearly, as the economy grows, more people get into formal employment, this sector will continue to grow. Now, as the economy is mature, the pension will become a significant part of the financial sector. And if we look at, again, a data point to get an idea that how the pension assets to GDP ratio look like, that gives an indication. We find that most of the African market is still fall below the benchmark of 60%, which is what usually seen in the large other emerging countries and the developed market. And this is linked to the low level of savings, is also linked to the unbanked population, and among other factors, and is primarily invested in public sector. So clearly, as the inclusion improves and the more formal employment happens, we'll see the development on this side as well. Now, what's the opportunities for the investors, and especially, let's say, people who are in this forum today focused on the private equity market? I believe that despite the underdeveloped financial market and risk premium attached to the sub-Saharan investments, there is an opportunity under the strong potential profitability and increasing capital inflow in the region, which is going to drive economic development, and particularly through investments and in equity. Now, we know that the opportunity to invest in public equity in the region has expanded in the last 10, 15 years. As I showed in the previous slide, that if you see that how the capital market infrastructure has improved. In fact, in 2000, there were 16 stock exchanges with around 60, 70 listed firms. By comparison, today you have around 25 stock exchanges which are serving 34 countries and have more than 1,000 listed companies in that. So clearly, a lot more progress has happened. Yes, it's a fact that still a number of stock exchanges are relatively small when you compare to those in the other emerging market. But their growth over the recent period is impressive. And of course, it's also supported by the government to attract more sustainable private sector investment, which is again a positive sign. The commercial finance in the region is still trying to focus heavily upon debt. And I think that's where the private equity offers the potential to invest in enterprises that may not have the capacity to absorb such large sums of debt, particularly new enterprises that are poised to grow very quickly given the right financing. And I'm sure a lot of you will know this segment of the market probably better than me, that the private equity is beginning to develop across the continent. And 2 years back, the Pan-African funds raised around $3 billion. And also, the development of impact investors also presents similar opportunity. And we know that impact investors tends to focus on investment that will yield positive social and environmental impact alongside the financial returns. Now, if we look at the current Africa position under the UN Human Development Index, I think this region presents a very attractive investment opportunities for impact investors. So long this can be combined with the financial returns as well. And it should be the attention of the investor. So what next? Where do we go from here? So I think to sum up, the African stories is emerging opportunities mixed with still challenges. And some countries, have made progress in migrating to market-determined FX regime, creating more transparent market, upgrading their regulations, aligning themselves to the global benchmark. I know a lot of capital market regulators are now member of the ISCO. They are benchmarking their regulations with them, and these are all the right trends. And this is vital to attract foreign investment and also to encourage domestic participation. High-yield international debt issues from the region, I think they'll continue to appeal to the global investors. Although I must say that there have been concerns raised by various institutions, including IMF, on the growing debt levels in some of the markets as a result of these issuance. Some jurisdictions have benefited from the introduction of innovative financial products. For example, the institutions such as Africa Local Currency Bond Fund, the guarantee company InfraCredit in Nigeria facilitate the introduction of new issuers in various African bond market, which is acting either as a backup or anchor investors. Certain exchanges are collaborating with the global exchanges to create the capacity building, which is good. Now, a lot of governments are looking at their privatization program through stock exchanges, We know that Egypt did their sale of interest in around 20-odd companies through the exchange. Angola has just announced 2 months back a very ambitious privatization program covering almost, I think, 195 companies over 3 years. A number of them they want to do through an IPO process through the exchange, which is, again, a great sign. And one of the key aspects of the recently finalized Africa Free Trade Agreement is the free trade of services. And I think that the success of the free trade agreement will rely heavily on the financial services industry. Why? Because if you look at the view from WTO, IMF, and other institutions, to make a success of it, what we need is to create the framework to facilitate transactions, mobilize savings, allocate funds, monitor the manager. Then only the true benefits of that agreement will be realized. So to end, and I think I'm coming to the end of my time as well, I think the factors of the demographics, increasing inclusion, huge financing requirement to fund the growth, intra-Africa trade and investments, this will create tremendous opportunity for regional and global investors. And we will also see the multiplier effect, because as the investments go into drive the economic stability and responsible governance, you will see then the further investment flowing in that. With that, thank you, ladies and gentlemen.